Sounds good. Well then, Thomas, thanks a lot to you and to the A2i network for inviting me to give this small presentation about frontier energy. Actually, what I was asked to do was to give an overview of sort of what I saw as business opportunities for Danish renewable energy in Africa. But the way I sort of wanted to approach it was by giving some insight into the experience that we've had as an investment fund operating in sub-Saharan Africa, minus South Africa. And then perhaps that would inspire some of the listeners to have their own thoughts about this. I also do have a little bit of an overview of some of the things we've seen from Danish investors or Danish companies over the years as the last slide, but typically I would sort of try to focus on rather on what we've done and see whether people can find some inspiration from that side. Just as an introduction to myself, I've been working with, I guess, with Africa since 1999, where I had my first trip to Uganda. I have lived also in Kenya for 5-6 years and visit very frequently. And right now I'm dialing in from Addis Ababa in Ethiopia, where I currently live, and I've been here for about 2 years now. I can see it's not an enormous group of people we have. I'll leave Thomas to manage how we interact, but for me, it's fine if somebody wants to ask a question as we go through the presentation. But Thomas, again, I'll leave that to you to manage, and then we'll see how things flow as we go through. So just taking a step back to give an introduction to frontier energy and what we do, we invest in the development, construction, and then also in operating assets within renewable energy in sub-Saharan Africa. If we look a little bit back at our history, there's sort of a fairly complicated slide. I won't go through all of the different points on it, but just to say that we were founded in 2010 by 3 former employees. I guess we were current employees at that time of Confederation of Danish Industries, DI, which was our founding father. We closed our first fund in 2011 with a mix of investments from Danish pension funds and then international investors, primarily DFIs, such as BII, which is the British government's investment fund, then known as CDC, and then by the European Investment Bank's fund facility called GIREF, which also specialized on renewable energy. Then we started working on developing projects, and we brought in Fund 1 5 hydro assets into operation in Uganda and in Rwanda, and then 1 geothermal project in Kenya, which is yet to reach financial close. On the back of that, we raised our second fund, which reached $227 million, and we closed on that in 2017. Again, with a mix of investors, primarily DFIs in terms of numbers, but we managed to get about 40% private capital as well, with our largest investor being Allianz, which is a German insurance company that any Bayern Munich fan would probably know very well. But also a group of family offices, and we ended up with having sort of 40% DFI capital, 40% private capital, and then 20% mixed private and public. And that was quite an interesting sort of insight into sort of the interest in renewable energy from the side of European investors. So we closed on that project, went ahead, did more hydropower assets, and then we reached the landmark in 2019. Where we closed on one of the largest projects in Africa within solar PV, which is located in Eldoret in Kenya. I'll get a little bit more into details about that later. We also did quite a lot of work with communities, and not that we're going to delve a lot into how we work with social and environmental aspects, but we achieved quite a landmark in 2019 where we, for one of our wind projects, received what we call free, prior and informed consent from the local communities, which are Maasai, who live in the area around that wind project, which is also located in Kenya. And now, sort of having brought a number of projects to fruition, including a hydro project in Zimbabwe, which is under construction, and a 60 megawatt project now in Sierra Leone. We are covering most of the African continent, at least Africa, sub-Saharan minus South Africa. And we are now in the market to raise a third fund, which we hope to close, have a first close on at the end of this year. So I'll start by talking a little bit about how we see opportunities for investing in energy and renewable energy in particular in Africa. And as I said, I'm dialing in from Addis Ababa, where I live. And I think it's a very good example of some of the challenges that are faced by African power supply and generation. So right now it's rainy season, so we have about 6 to 7 power cuts a day, continuously shifting to backup power, and that comes from various different reasons. First, the fact that there isn't enough supply, but also the fact that the transmission and distribution system is relatively old and that very few investments are made into that. So as a consumer, as an individual private consumer, I experience that very often, but so do all the companies that operate in Addis Ababa that either rely on backup power, but many of them simply don't have power and lose production when there's downtime. We did some estimates of just to look at what was required in terms of additional capacity, generating capacity in Africa to reach different stages of development. And we tried to do a comparison with India. And if you look at currently, there's about 50 gigawatts of power generated in sub-Saharan Africa minus South Africa. And that's about 0.06 kilowatt per person. Now, if we shift to the level of what India has right now in terms of individual power consumption, that would mean an additional 250 gigawatts. And if we then shift to South African consumption, we would require an additional 800 gigawatts of investments to reach just the level that we have in those countries that are sort of fairly comparable. If you then look at reaching the EU level, then it's almost 2 gigawatts of additional power that need to come on stream in the next years, which is a massive amount and probably not achievable. But if you just look at the first milestone, it requires about $500 billion of additional investment over the next 20 years. And we look across the continent, we see that all the countries, at least that we work in, have very, very ambitious plans for how they can increase their generating capacity. Not all of them are necessarily realistic, but if we look at Ethiopia, the plan is to have to at least sort of have about 20 gigawatts of additional power within the next 20 years. Kenya, about the same up until 2030, 2040, 2050. Very, very ambitious plans. And what we see then as sort of the grower, as the drivers of demand is just from a sort of a private perspective is that we see that a shift away, hopefully, from backup diesel generators, and then also that the grid becomes increasingly expanded. So yesterday I saw an article just again here from Ethiopia where EEU, which is the generating and distribution company here, they want to increase the number of consumers to 7.5 million in 2030. This is in a country of 120 million people where the coverage would reach 7.5 million customers. It shows a little bit about how little coverage there is and how much suppressed demand there potentially could be in the coming years. But the real drivers of growth is not really adding marginal customers. It is the shift away from agriculture towards increasing industry, and it's economic growth, which even though African countries have suffered quite a lot under COVID, seems to generally reach an interval of 5 to 8% per annum. And then, of course, the basic driver, which continues to be sort of very important, is just the population growth, which in Africa continues to be around 2.5% per year, which will lead to massive additional demand from consumers in the coming years. When we then look at renewables, then there is a number of different, let's say, technologies that we've looked at as being competing as a renewable energy fund. And the first is coal. And I guess we have to accept that coal is still the backbone in many countries, also in the countries where we live, whereas coal in many places in Africa hasn't really taken off. But it is still a potential competitor. What we, however, did see is that reaching the levels of coal prices that we see in Europe is very, very different, where you can get down to about $0.05 per kilowatt hour. Many countries here have coal reserves, but one of the issues we've seen, and a case in point, is when Kenya tried to develop a coal plant in Lamu. That project was abandoned a couple of years ago, despite a lot of investments having taken place, but it was abandoned for various different reasons. The first one was that one would need to build an enormous transmission line from the coast to Nairobi and then further distribution out. The investment capital was not really there for that. The second was supply issues, where it was very difficult to get the coal, even though Kenya has coal supplies itself. It seemed like the coal would have to come from South Africa, which led to further port capacity problems. And then finally, what probably and hopefully, well, I guess as a renewable fund, I can say hopefully, would put coal in the grave is the fact that it's almost impossible to get international financing for coal plants now, with even China having abandoned their options for financing coal plants outside of China itself. So we don't see coal as being a very big competitor going forward. Then there's natural gas, with again many countries in Africa having natural gas supplies. Natural gas again comes with its own logistical problems, and it certainly does provide power in different places. For instance, in Tanzania already now, some of the key power plants there are gas-fired. But we don't see gas as being price competitive, at least not as things are looking currently. So we see that gas will mainly be used for peaking power, so during peak demand hours, it will be used for that. And gradually, as we see prices drop for storage, especially battery storage, and then also for solar PV and wind, we think that the combination of those two will be price competitive also with gas. Then there's, of course, the typical historical backbone of African power supply, which is diesel primarily and heavy fuel oil. Again, with the prices that we are seeing on the inputs, diesel, heavy fuel oil, we don't see that as a competitor in the future, except for very sort of specific uses such as backup, where again, and speed, where it's pretty efficient and quick to install these facilities. Our project in Sierra Leone is quite interesting in that regard, because it's a solar PV of about 60 megawatts. It is basically put in place to replace a power barge, which is right now generating almost all of Sierra Leone's power from a location just outside Freetown. And it generates at somewhere between $30 and $50 per kilowatt hour. So anything that replaces something like that, and in this case, a solar PV plant, is not only extremely competitive, but it will also get rid of an eyesore parked just outside just outside the port of Freetown, and it will reduce the cost of power significantly in what is also what we call a fragile state. So renewables, in our view, will be quite competitive. Large-scale hydro is very cheap and continues to be so. In Ethiopia, a 5.4 gigawatt hydropower plant that's gigantic is now being commissioned slowly, with the two first turbines having been commissioned in the last year. So about 800 megawatts of power is generated from large-scale hydro, and we think that large-scale hydro will still have a role to play wherever it is possible to implement it. But if we look at smaller distributed technologies, then small hydro, wind farms, solar farms, and also geothermal will have an important role to play, with tariffs ranging from $8 to $10 per kilowatt hour. And if prices drop on inputs again, those prices could be reduced. And hence we see renewables as being a price competitive play on the African continent. If we then look at the current environment around investing in renewables, it's looking quite positive. There is a very strong backing also based on all the discussions there are around climate change from international donors and from the international community, with a large amount of capital being available, at least in principle. A small comment on that, though, is that there seems to be a little bit of a gap between the returns that most also DFI investors would like to see from their investments in Africa, and the tariffs that African governments want. And there is probably a fairly important discussions that need to be taken as to whether the return expectations from donors and from DFIs can be reduced slightly to accommodate some of the wishes for lower tariffs to consumers and industries that African governments would like to see. Currently, that gap is not necessarily always being bridged because there's a lot of delay around price discussions between governments and investors, but hopefully that gap can be bridged. But that means that energy planning is not very solid, because most governments wait until energy is so desperately needed that they're willing to accept, let's say, the tariffs that investors require in order to make a return that again satisfies their investors, which then can range anywhere from pension funds to DFI investors coming from abroad. So that's an important discussion that needs to be undertaken. We're also seeing a very good push for better regulation, with split into former state monopolies being split into generation, transmission, and distribution. Also positive energy sector reform, where we see supporting environments coming in place for competitive bidding rounds that yields quite low prices, which I have another comment on, or feed-in tariff policies where the government says we will take in projects that come in at this or another price, but typically determined by the government. It says as long as you can do a project at that price, you can come and invest in our country. A small comment on the competitive bidding rounds in Africa has been that in many ways they've been successful in very well-organized countries, for instance in South Africa. In other countries, they've been less successful. I have, for instance, a story here from Ethiopia, where there was a tender for a 200 megawatt project a couple of years ago, which was won at a tariff of $2.1 cents per kilowatt hour, which is probably among the lowest tariffs ever seen in a competitive bidding round. The problem is that that project never got built and never will be built, because the competitive bidding round basically led to unrealistic bids and investment funds, in this case a Saudi investment fund, wanting its foot in the door with the hope of renegotiating the tariff later. So the government of Ethiopia cancelled the bidding round about 6 months ago and is now trying to find out what to do in solar, and with no real solution for it. So it seems that the feed-in tariff policies have worked better in terms of getting more renewable energy online, because that means an investor knows what it will get and designs a project around that. And that has at least led to quite a lot of success in Uganda and in Kenya, and also in Rwanda, which is some of the markets that we've invested in. We're also seeing a shift towards large private off-takers, which is interesting for an investment fund like us. We now have our first project with a cement plant in Kenya, where we will supply directly outside of the grid to them. And then we're also seeing that the returns at least are looking fairly interesting. And these are proven returns, I suppose, from us as a fund, where we see operating assets in Europe and North America yielding about 3 to 4% per annum in returns, whereas in Sub-Saharan Africa, we can get 11 to 12% on operating assets, and the same for greenfield projects, where again returns in Europe are probably 6 to 8%, whereas in Sub-Saharan Africa we can get 14 to 18%, and that is regarded as being competitive. And then a final observation around environment, which is that Africa is often perceived as being an extremely difficult and risky place to invest. That has not been our experience, at least when you get into operations. Most of the projects that we've invested in have either insurance or they have a government guarantee, which basically provides protection against risks such as war, civil disturbance, change in law, change in tax, change in tariff. And if you look at, for instance, our experience in Kenya and compare it to the experience in Spain, there was a sort of a consolidated decrease in tariffs across all Spanish solar PV projects. That could not happen in Africa because of the government guarantees and the insurance backup and the relatively large amount of influence there is from investors on this continent. So in some ways, we see that an investment can be better protected actually on the African continent than it can in Europe or North America. I know that there's not an enormous amount of time available, so I won't get into very great detail in this slide. Just say that the potential within solar, hydro, and wind is great, as well as in geothermal, which I haven't included on this slide. We had an interesting discussion with a consultant yesterday who's done a feasibility study for us on a small project in Somalia. And the consultants were extremely excited about the irradiation on that site, not only because of the irradiation, but also because of the albedo, which means that we can actually use bifacial panels there for both harvesting, let's say, the direct sunshine, but also the reflective sunshine. So the amount of production generation we can get from a solar panel is just quite amazing. Hydro potential is very great. Frontier has invested a lot of its capital in hydro, and we will continue to do so. And then the wind potential is also in coastal areas and along the Rift Valley, which stretches all the way from southern Africa up to Djibouti. Rift Valley wind is amazing with capacity factors being almost double of what we see in certain sites of what we see in Denmark, where capacity factors are about 30%. At least on onshore wind in certain sites, it's almost 60% in Africa. So there's a lot of interesting potential. So returning a little bit back to Frontier Energy, again, I won't spend a lot of time on this slide, but just to show where it is and some pictures of some of the power plants that we've invested in, some of them in construction. The one at the bottom is our solar PV plant in Kenya, which covers almost 400 acres. So it's a gigantic project, 100 megawatt DC, 80 megawatt AC. But apart from that, many of our assets are in hydro, in solar, and in wind. And we've now invested both in East Africa, Southern Africa, and also now in West Africa, where we have projects under construction. And our experience is that when we sort of try to get to know the countries well, and invest our own personal time in getting to understand the business environment, it's possible to both develop and construct projects in almost all the countries that we've come across in the past years. So I'll speak very briefly about two cases before giving some observations on some of the business opportunities for Danish renewable energy. The first one is, again, the power plant in northwestern Kenya, the solar PV project, which has been in operation since April 2021. Again, one of the largest developments, solar PV developments outside of South Africa, on the African continent, at almost 100 megawatts. We've invested about $150 million in the project, together with senior lenders, FMO, and European Investment Bank. And it's been a very, very interesting process for us to go through. It sounds like we've been a little bit slow because we started in 2015 and the project only reached operation in 2021. But since it was one of the first projects, if actually not the first project, large-scale solar PV to reach operation in Kenya, we actually regarded it as being a fairly successful process, which we hope to replicate both in Kenya and which we are already replicating now in Sierra Leone, and also we're looking to replicate it in Malawi. So this is an example of a very standard, large-scale, grid-connected power plant that will continue to have a large relevance for Africa. And hopefully that can be implemented at a much higher pace than the 6 years it took us to develop this from greenfield to operations. I've also taken another small example along, which is a little bit more unusual. It's an example of an investment that we're looking into in a frail state, Somalia, where we are looking at doing a solar PV and battery energy storage system in a town called Garowe in Puntland, which is one of the more peaceful parts of Somalia. So we are working with the local energy company there called National Energy Company of Somalia to develop a 5 megawatt solar PV and 20 megawatt hour battery storage project, which will basically replace the diesel generators you can see in the bottom left corner with solar PV. It's a slightly unusual project because everything in Somalia is private. There's no government regulation, hardly any government intervention, but there's a fairly organized off-taker, in this case, this group from Nexon. And we are then working with IFC to develop the project, with us being the lead developer and them providing an investment. But they will also work with MIGA, which provides political risk insurance and primarily insurance against war and civil disturbance. And with a package where we can have MIGA insurance, perhaps some finance from IFC, we think we can get a project like this to become about as safe to invest in as a project in Kenya, where we don't take insurance. So that's an example of a different type of project that would, in our view, be very, very applicable across many places in Africa, because it provides energy without having connection to a centralized grid. It provides just power for a city, and we are looking at similar type projects in both in Central African Republic, in Somaliland, and in the Democratic Republic of Congo. So we think this can be very interesting in terms of getting distributed power to places that otherwise would not have it at all, or where it would basically displace diesel generation, which comes at a very high cost, and of course with environmental consequences as well. So final slide is just a little bit of an input on opportunities for Danish companies in renewable energy. And I have to say it's a little bit difficult because we haven't seen an enormous amount of companies trying to invest in or provide supplies to the renewable energy sector in Africa. And I suppose it doesn't help much to say that, of course, Vestas, the large Danish turbine supplier, has been active. They've been active both as a supplier but also as a turnkey contractor, and we are working with them on one of our projects. We used to have Baumeister and Wayne Scandinavian Contractor also being active in EPC, also outside of the traditional diesel power plants that they used to do. But unfortunately, they closed their business, or this business, about a year ago. So they're no longer that active. Where we've seen, though, a lot of interest has been from Danish developers that we've worked with, we've encountered across the continent, many of them being very competent. And there seems to be an opportunity for the skills that come with having developed projects in Europe or in Denmark to be applied somewhat also on the African continent. Then there's a wide range of consultants we've seen, many of them known, most of them within wind. But that's an area which is sort of a typical Danish strong point. And then there's a whole range of investment funds, ourselves included, AP Møller Capital and IFU with their climate fund, that provide capital for companies that wish to invest in Africa. So those are some of, let's say, the more classical companies we've seen trying their luck. But where it seems to be more interesting is within sort of more innovative technologies. We've worked with a Danish company called Welltec, which has technology which was used for the Danish or for the oil and gas sector globally. They were looking at seeing whether one could use their technology fundamentally, which can do fracking, which I guess some know from the oil and gas sector, in particular in the US, to enhance geothermal resources where there was little or no permeability, meaning that there was no water in the resource, but a lot of heat. I believe this project wasn't successful for various reasons, but I believe Welltec are continuing to look at that. We've spoken to a supplier of floating wind turbines that could be used off the coast of Somalia, because the conditions on land aren't always very conducive to infrastructure projects. We've spoken to another company that is looking into doing storage of energy in molten salt, which has certain advantages on top of what one gets from batteries. They're looking at doing that in South Africa. And then, not that this is a renewable technology, but we've also come across a Danish company that is looking to do small nuclear power plants, 50 to 100 megawatts. Now, many people may not like nuclear, so let's just leave that aside. But having solid baseload, rampable power next to renewables is extremely important to balance grids. And since coal does not look to be competitive, having distributed at least non-CO2 emitting power that can provide backbone could be quite useful as a backup to renewables. So that's a little bit of an overview of some of the themes that we've seen over the years. But again, this presentation was mostly to hopefully give some inspiration to the people listening to this presentation as to what they could potentially do within renewable energy by giving an overview of our experiences. So Thomas, that was kind of what I had as by way of a presentation, but happy to take questions or just enter into a discussion or whatever you want to do as I suppose the facilitator.
Yes, thank you very much, Lars, and thank you for sharing these many interesting insights into the renewable energy sector in East Africa. I must say it's quite encouraging to listen to that you not only you managed to get the investors on board, but also the fact that you managed to navigate the different risks that are, including all the regulatory risks, and you seem to have gotten a hand on that quite well. So that is encouraging. Okay, so if I can just get you to remove the presentation, then I can see. And if anyone have any questions, please raise your hand or post them in the chat. In the meanwhile, I do have some questions. So I think in the projects that you have implemented, just to touch a little bit on the risks, what are the social and environmental risks that you have encountered, and how do you typically deal with that?
Well, I think if we divide them into the two and leave out governance, right, then I would say the key sort of risk we've encountered is really not environmental. Even though there are issues to address when you build a power plant, generally those are issues that can be mitigated. The key risk we've encountered is basically risks have been within social, where we've been in this sector now for about 11, 12, 13 years, which is a long time. So there's been a lot of, let's say, emerging knowledge on how to work with communities. And I think that's gone all the way from basically just doing a stakeholder engagement plan to now needing to do what's called broad-based community support, BCS, to basically understand whether a community around a power plant accepts the power plant and understands what impact it will have to it, to free, prior, and informed consent, which I mentioned earlier, which means consulting mapping, doing a social baseline, getting to know all individuals that typically would come from indigenous communities, getting to know them, working with them, and actually signing an agreement with them, which needs at least minimum 80% consent from the local communities, which basically documents what the project will provide to them in terms of what they've asked for from a project, from projects such as what we typically do. So that is a way of addressing, you could say, some of the community impacts that projects like these have. And I think the risks around that, I mean, the reason for doing these very long and difficult processes is actually to mitigate the risk of communities being unhappy with a project. And that has been extremely useful in our work, though it's also quite time consuming. But the biggest problems that we've had is whenever anything has involved involuntary resettlement or projects affecting traditional livelihoods. Now, all of those things can be addressed and mitigated. And it's something that we pride ourselves on being able to do. But it's a very time-consuming exercise, and it can be a risk to a project, which basically means that one decides not to go ahead because the communities are not willing to accept that an investor such as us comes and somehow steps on their traditions or the way they use their land. And that's also fine and acceptable. Then one must look for places to invest which are elsewhere.
Okay, thank you. We have a question from E. Please go ahead.
Hello?
Yes, we can hear you.
Oh, sorry. I had to change from my cell phone to my computer because the first half hour I was sitting in my car listening to this very interesting speech here. Thank you, Lars. It's been very interesting listening to. I understand so far by your presentation that you are in financing alone within primary energy, meaning all energy produced on the primary side, whether it's within renewable energy. Since I'm representing my company, EA Energy is representing Logstor. I don't know if you know them, but they produce pre-insulated pipes. So we, of course, look at how to distribute the energy being produced on the primary side, and to distribute it within primarily within the process industry, for example, food industry, dairy farms, tea industry. And we very often see that they will subsidize the diesel generator or HFO with biogas or biofuel. And then they are not looking into their infrastructure in the factory, where you see worn out pipes, pumps, no insulation of chimneys, and so on and so on. And it is, for us, of course, it's interesting to learn that when you are doing investments on the primary side, which is good, very often the secondary side, where the steam, for example, is produced from the header to the feeder, is not looked at all. Is it your investment profile? Is it alone on the primary side, or will you also look into the hardware that is needed to distribute the energy on the primary side? That's my question.
And thanks a lot for your observations, also for the question. I think for us, a next push would be to look at what you are saying, basically what you're describing, to see whether we can get into distribution. Now, our first point would probably be to look at actual sort of energy distribution, but as we begin to work with industrial off-takers, it could make sense for us to also look at whether we could invest in energy efficiency within the premises of such an industrial off-taker. And what we're also seeing is that there is and has been quite an interesting push for improved energy efficiency. We are seeing one company here, actually based out of Kenya, but which operates sort of a little bit region-wise, basically doing energy service contracts with both industrial off-takers and hotels, where they basically make their money only from the savings. And the way they do it is that they first map the inefficiencies, and then they install equipment to reduce the inefficiencies, and then they make their money from the improved efficiency and the power savings, energy savings.
Yes.
That the various companies and hotels then make. So I think that there is a good push for let's say for focusing more on energy efficiency and on the savings that come from that. And I think what you represent, I guess, from Logstor would have a very important role to play in that.
Yes. Okay, thank you.
Thank you. There's a question from Moses.
Yes, let me unmute myself. Yes, thank you very much, Lars, for a very interesting lecture. I can see that there is a lot of investment going into the large-scale energy sector, wind, solar, hydro, and even some fossil fuel, coal and oil and gas and so forth. But my question is, how do you see the investment in small-scale community-level microgrids based on local generation and use? This sector seems to be the neglected one, particularly for off-grid communities. How do you see the investments in this area? Why are people not putting money into those areas?
Okay, so let me answer actually through in two different ways, right? Because one as a steely-eyed investor, I guess. So the issue with very small community-based projects is that typically they require about the same amount of work as a larger town-based project, or even as a full-scale grid-connected project. I think that's one of the reasons why there's not a lot of investment funds flowing into very small community projects. And I suppose many of those would then become distributed to the household level. And there are some projects, I guess, that provide distributed energy all the way to the household level. But I agree with you. It's an area where there has not been enough investment, and it comes from that partly, but also because it is not very efficient for a utility to add marginal customers to the grid. It simply is not feasible. And one of the reasons why KPLC, the Kenyan utility, almost went bankrupt was from its last mile push. So that's the very negative side of it. The more positive side of it is that I think funds like ours are now beginning to look at something that, let's say, falls size-wise between large grid-connected projects and then smaller community-connected projects. And I mentioned the project in Puntland, which is a relatively small project for us, which is about 5 megawatts, but which basically supplies a town. And that is, let's say, someplace in between a large-scale project and a smaller one. We're looking at another project in Central African Republic, which primarily focuses on one large, very stable customer, but in connection with supplying energy to that very large, stable, and creditworthy customer, one can then connect as community impact communities around where that customer is. So the idea would be, as part of larger investment, to then start connecting around. And I think that's some of the ways of bridging the gap to between the large grid-connected projects and then the small community-based projects. But unfortunately, apart from investors investing in household distributed energy, there's still a gap to be filled there.
Okay, thank you very much.
Does that answer your question, Moses?
So that was what I expected, though I'm not too happy with it.
I'm sorry.
You've told the truth, and because I think that to reach the 600 million that are left not covered at all by traditional energy sources, where one needs to look at these non-profitable, currently non-profitable areas as well. I think that the technologies being developed now should be able to make this also competitive, not in the long future. I think maybe this is where my institute, Technologies Institute, would have a role to play, because we are trying to bring down the cost of these technologies to be able to reach the 600 million that is left.
Fully agree.
Thank you very much, Moses, for bringing our attention to this challenge. And to you, Lars, thank you very much for sharing your time here with us today. It has been highly interesting, and I think it's encouraging what you have achieved. And I wish you the best of luck with your future endeavor. For the next A2i Talk, that is on the 14th of April. So please tune in at that time, and have a nice weekend when you get to it. Thank you.
Bye.
Bye.
Bye.